Good evening, everyone. Welcome to Hit the Bid here on May 25th. This is Ty Robbie here with your Week 21 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we need to be ready for as we head into Week 21. So let's jump in and get started. First on the board today, we got our August live cattle. We did see some downside here across this cattle market last week. Both live and feeder prices losing some ground here while we did get an uptick in volatility. However, we continue to see relative strength here in this live cattle market compared to those feeders, which we'll be getting to in a moment. But first up, this August live contract opening up last week near 249 before seeing some steady selling pressure all week long. We did see that volatility really start to pick up here on Wednesday and Thursday's action as we did flush down here below that prior swing low at 240 and finishing the week down there below that 50-day moving average. This isn't a great look here for the bulls at the moment, but they do have one last line in the sand to defend here at 237. We can see Friday's action balancing out here on top of that level, showing decent support here at the moment in the near term. Just have to wait and see how this action unfolds early in the week ahead. Friday's low coming in here at 236.82. We're going to call it 237 for round number's sake. And as we can see here in recent months, it has been a pretty crucial line in the sand. Prior resistance back here in February is now offering good support. Nice little bounce off of that 237 line here in late April, as well as Friday's action balancing out right on top of it. We also have this rising 200-day moving average coming up into this 237 area, offering good long-term support. So as long as these bulls are able to come in and defend this line here in the week ahead, they do have a chance at continuing with this rally. But we just need to make sure this 237 line is defended. Any offers down here below Friday's low should see a pretty quick mark down here to 230 to 232. This prior demand zone that kicked off this big picture uptrend here recently is going to be that first step down here in the event of offers below Friday's low. So look for continued selling pressure and volatility if we do get any offers down there below 237. Encourage everyone to slow play that thing, be cautious here, and start to raise more cash in the event of that, as we could see more volatility and some more wild action. However, the bulls are finding some decent support here on Friday with this market balancing out here between 241 and 237. We do have some decent lines in the sand to trade around. Here in the week ahead. As long as these bulls can defend 237, they have a good chance at a rally here. We need to get some bids above 241, where we could see this market get pushed back up here into the mid 240s. We do have some leftover supply here from the sell-off late last week that they're going to have to chew through. But if they're able to push through that area, we could see this market get back underway here and rally back up there towards 250. As we can see here in recent weeks, though, this market has been pretty comfortable, trading in some wide ranges here between 240 and 250. So this market has not really been able to make any really significant moves in either direction. So wouldn't be surprised to see this thing be sticky here between 240 and 250 in the near term. Not expecting any major breakdowns, but offers below 237 could get that selling pressure back underway. Bulls need to get this market pushed back here above 241 to keep this thing stuck up here near these all-time highs and get a potential rally back underway here. So I'll have to wait and see how this market responds early in the week ahead. We do have some good news coming out of the White House regarding the Iran situation, so that could be a potential for a little bit of a bounce here to start the week, but that's not reason enough to have a sustainable up move. So we just need to make sure that these buyers are able to come in and continue buying this market up and offering support here in the week ahead to really keep this uptrend on track. Next up, we got our August feeders on the board. We did see more weakness here in this feeder market. Last week we did balance out and try and get some bids early, as we did see this market push up here on Wednesday towards 365. However, Thursday and Friday's actions where we really saw this feeder market get hit, losing nearly $20 along the way. We did sell all the way off from 365 all the way down here, undercutting 345 briefly there on Friday. We did see that limit down move here on Thursday, setting us up for that gap lower on Friday, where we really saw that market get slippery down here below these prior swing lows. I encourage everyone to continue to be defensive here and raise cash in this feeder market while it tries to stabilize. We would like to see this market kind of tighten up and trade inside of Friday's range and try and find a little bit of support here and balance out here before we really commit to any more upside. With this action we saw last week, encourage everyone just to be defensive here, slow play this thing, and wait for some better spots to trade around here throughout the week ahead. You're going to be better suited trading around this live cattle market where we got that relative strength while we wait for this feeder market to clean this mess up from last week. Pivot points here for the week ahead. is going to be 350.17, which is the closing price for last week. Offers down here below that level. We expect to see this thing continue to chop up at some wide ranges near the 340 to 350 area, kind of like we saw back here in the month of March. So we'd expect to see that choppy, bouncy action to continue with any sort of offers below 350 in the week ahead. Bulls need to get this market pushed back up here above 355.5 or Friday's high, close that gap, and get this market moving back above our 200-day average. We'll have to wait and see, as this market has been pretty choppy here in the 360s recently, so it's not going to be an easy climb out of here, but the Bulls do have a chance, if we do get some bids above 355, to get this rally back underway. Like I said earlier, avoid this feeder market here in the near term as we continue to see some volatility and relative weakness there. If you're going to be playing this market, look for those live cattle prices to be where that strength is at. We'll have to wait and see how this market unfolds here in the week ahead. Encourage everyone just to be a little cautious, a little defensive here and slow play this thing. We need to make sure that we can find that support and balance out here in the week ahead and before we can get this uptrend back on track. So slow play this thing, be patient here, and we should see this market try and get some bids rolling back to the upside. Next up, we got our July corn futures on the board. Not a whole lot to be said here about this corn market as we continue to see pretty sticky action here in the 450 to 480 range. Last week, we did see this market open up and push back up there towards 480 before seeing continued resistance up there at the top of that top end of this range. As we can divide this thing up here into quarters here, we can see the top quarter of this range offering good resistance, bottom quarter of this range continuing to find good support. Not a whole lot else to be said here about this corn market, just continuing to see some volatility in wide ranges here while we bounce back and forth between 450 and 485. We expect to see that action continue here until we can get a close beyond either one of these edges, and in the near term or in the meantime, look for this choppy range bound action continue here in this corn market. Same story here for this crude oil market as that July corn market. We continue to see these crude prices bounce back and forth here between about $90 and $110. We have seen a $40 range back here on the 9th of March that has kept this market contained since. We continue to see this market trading some wide daily ranges, sloppy action here. We are continuing to see some lower highs here as we are starting to see this thing bleed lower a little bit. Not really expecting any sort of sustained up moves, just more resistance up here in the $100 range. This market did see a negative response to that news coming out of Iran over the weekend, so we did see that market push lower, briefly testing $90 here so far. But as we are pushing into the low end of this range, we are starting to see a little bit of pushback there. So wouldn't be surprised to see this thing continue to chop up and bounce around here in these ranges. And we should see just more choppy action here. Not a good market to be looking for any sort of alpha right now. Look for this choppy action continue and steer clear of this thing while it digests all this recent volatility. And we'll have to wait and see for some directional moves with some sustained action down here below $90 or the other side. But that's very unlikely here, as we shouldn't really see much more upside into those $100 range here, barring any sort of escalation. So look for this choppy range bound action continue in this crude oil market as well. Next up, equity markets seeing a nice dip and rally last week. This market pushing down there, not even being able to reach down there to that 20-day moving average here for this S&P index. NASDAQ also seeing good relative strength here, still failing to get to that 20-day average here and pushing up into new all-time highs here already in the evening session, coming off the Sunday open as well. And the Dow getting up here into new all-time highs as well after bouncing off that 20-day average. So we have seen a couple weeks of good balance action here in this Dow index. Seen nice traction back above 50,000 here so far. A lot of good action in those major components. We did see some decent dips here, and we still got NVIDIA pulling back into their averages here this week. So we should, with them being a big piece of the puzzle here, we should see them get a bid here early in the week ahead and keep pushing these equity markets back into all-time highs. The stock market continues to show relentless strength, more upside last week, and we expect to see that action continue here in the week ahead. Very good environment right now, and we should see pretty smooth sailing into these all-time highs here across each of our indexes here as we head into summer. Look for that upside to continue across the stock market. In the meantime, slow play these cattle markets. Wait for them to find the support they need and get that early traction of the upside going before we really commit to this uptrend and seeing more upside there. But That's all we got here for this weekend. Hope everyone enjoyed their long 3-day weekend and the Memorial Day. We'll catch you guys tomorrow night for closing comments. Thanks. Have a good night.